Ladies and gentlemen, welcome to the Fintech Frenzy live stream. Welcome, Lincoln. Gotta make sure he's not playing with my audio levels. I even turned the camera back on so you guys could see him, just in case. I got a Lincoln cam now. There he is. How's everybody doing? Yeah, beat-ups. SoFi Fireside Chat, June 12th. Okay. Stop. Yeah, I'm super excited about that. I was really worried that SoFi was not going to be doing any sort of fireside chat or anything like this, but that doesn't seem to be the case. They are. Don't put your butt in the camera though, please. They are actually going to be chatting. So today we have a lot of news. We're going to be talking PayPal, Shift4, maybe a little bit of Shopify, just a small piece of news. Okay. Affirm, Robinhood, Coinbase, eBay, American Express, maybe. There he goes. Come here, Lincoln. Anyway, so come here, bud. He's behind the camera of my second camera. So why don't we go ahead and start with PayPal stock, eh? Okay. So PayPal had fireside chats. So did Robinhood, which I actually only got around to seeing just a little bit of it. And then so did Shift4. Okay. So in terms of the PayPal fireside chat, we did actually live stream that. It was still pretty interesting for the most part. We got to hear all sorts of stuff like, what's called Fastlane end up getting sold to or being sold through Braintree to a lot of the enterprise level clients, that they don't see anything intra-quarter that could possibly slow down growth right now. And in fact, they've actually been trending ahead of Q2 guidance. So we're only about, 2 months through that. We haven't finished the full quarter, but it does make for pretty good news knowing that that we are ahead in guidance there. Now, one of the things that they did continuously point out, and I think that it's very important that people understand this, is that merchants finding customers is seemingly their biggest problem. This is one thing that they are not really getting past. And so they believe they are they are technically the largest dual-sided network in the world, right? They have 400 plus million users on the PayPal side and 35 million merchants. So how do these merchants get customers? Well, they don't even need to really look externally. And there's advertising platforms for this. There will be ways for them to sell through Venmo, ways for them to sell through PayPal. And so they're really heavily pushing on this. One thing I noticed from the PayPal fireside chat, Alex Chris could not stop talking about PayPal complete payments. This is the reason why we got him as a CEO in the first place. He came from SMB banking or SMB, not SMB banking, SMB just selling like a e-commerce side. And so obviously that's going to be a big focus of his for, you looking right at the camera? That's going to be a big focus of him for that too. So the biggest problem right now is that the high majority of the merchants that PayPal has are still within their old sort of PayPal Pro merchant solution. Getting them over to PPCP is going to increase revenue. Okay. They are trying to reduce the time to end up switching. They think it's down to 2 hours now. Before it was 2 weeks. And with value-added services like package tracking, smart receipts, and Fastlane, they don't think that they're going to, essentially slow down in that offering. So they want to get Fastlane up and available for a bunch of platforms before holidays in the second half. So they want to get that rolled out, and then it'll be perfectly out in a like ready for a full year in 2025. thought that was interesting. Venmo customers, they said, are very hungry for value-added services and that they just need to put out more products. It's all about sort of getting higher attach rates on their debit cards, making direct deposit much more easier. They said that it was very hard for the longest point, and they were kind of just like losing like growth just based on that. Tap to pay is a real focus for them. E-commerce payments are a real focus for them. So, bye, Lincoln. All right. But one of the things that I thought was really interesting, they said, they were asked about cutting costs. They said, well, we're not 100% sure that we even want to cut costs in a lot of areas. Like, we still are investing for growth. This is not some activist play where we're picking apart this company and just trying to sell it down to bare bones. Like, we are trying to actively invest for growth and not sort of saving at all costs. We're here for the long term. So hopefully, they can get that going. So, and they also want to turn around their Zoom, which is their cross-border thing. They said the two biggest ways that they are planning on expanding margins right now is PayPal Complete Payments or small to mid-sized businesses and international payments. So those two areas they think have a ton of margin, and they're going to see a lot of growth in that area. Now, let's move on to some Shift4. That's why we're here. They did a fireside chat. Remember, I'm still learning this company. So the fireside chats is on, like, honestly, I should have listened to this one live. It was so exciting. Okay. They said a lot of great things. Let's go through it. One, they brought up a couple statistics that were new to me and potentially new to some of you guys as well. So they have a 40% market share in hotels. Okay. However, they are winning 75% of every lead that they get. So the market share gains happening at a very fast pace, okay? And it's funny because they said, don't confuse the idea that because we have 40% market share, that we have 40% wallet share, okay? There is so much vertical expansion that they can end up having within those actual hotels. But we are in the first phases of getting in there and increasing payment volumes. They even go into the size of hotels and everything. If we have time, I'll do that as well. But they said that their growth is very comparative in terms of volume growth with the companies like Stripe and Adyen. The real kingpins of payment growth, the new style, the new players. Adyen mainly focuses on enterprise payments, e-commerce side. Stripe really focuses on e-commerce payments on the SMB side. Now, Shift4 says we are in hotels, stadiums, and theme parks. Okay. Historically, not an area of a lot of growth. So how are we putting up this much growth? Well, we are just winning so many freaking deals, which is a really interesting way that they are going about it, right? Because growth is growth. I mean, if you're picking up hotels that are essentially bringing in what they said, anywhere from 50 million a hotel to hundreds of millions of dollars in volume per year, they're massive ads every single time that you get just one. Now you look at them expanding into Europe and they're getting Leonardo hotels. They got hundreds of hotels in a single deal. They got the entire chain of hotels in Europe. So that was quite interesting. In terms of stadiums, they said, hey, 4 years ago, we were in no stadiums. Today, we're in 75% of every stadium in America. One, they acquired a company that was the second biggest player in the space. And then Appetize came around and they said, hey, why don't you come and buy us? The company that owned it before, they didn't mention it. I had read about it before. I forget what they were called. Is it Spot Point? Something like that. It's Spot something. Anyway, they are Spot On. Maybe it's Spot On. Anyway, they ended up saying, hey, why don't you buy Appetize from us? We are your larger competitor. And so Shift4 was like, well, all right. I mean, we'll be the second and first largest player in this space. Now they own a relationship with most of the stadiums. But for the most part, a lot of it is very small percentages of the overall wallet share that's happening in those stadiums. And so they're also growing, not only horizontally, but vertically within those relationships. So that's awesome. They said the average customer size that they've gotten over the last 4 years has gone one direction, straight up. And another thing that they talked about was how they use acquisitions to reduce customer acquisition cost. Super freaking cool. So they did actually verify that they acquired Vectron in Germany. Okay. They gave us real numbers. They are acquiring 65,000 locations for $95 million. That's $1,461 per merchant. Like an unbelievable thing. He said, in our view, it's extremely cheap. That's what he said while laughing. Okay. So this idea that they can go in and acquire companies that have essentially been selling, SaaS level products, saying, hey, you know what? Pay us for the point of sale products and pay this monthly rate, and boom, there you go. And Shift4 wants to come in and say, hey, we're going to actually process these payments for you. We're going to take a percentage of the transaction and potentially don't even worry about those monthly payments. And so they're really shifting the business. This has been the whole bulk of Shift4's wins, is shifting the payments from not just selling hardware, but to also selling the payment processing side and really gaining a lot of growth that way. They really were talking about Toast, saying, we are essentially the second best option in mid-market POS for restaurants behind Toast. Toast is by far the dominant player, but we are growing faster than them in this area. We are taking market share. We are really trying to focus on just one style of restaurant, table service restaurants. So they said, we're not really in convenience store level, small pop-ups or fast service nearly as deeply as Toast is. But they still do have some restaurants that are doing like $50 million in volume at a single location. So landing really big names, but in a very specific niche, just happens to be a really big niche at that. But one thing that they did say is that if you are to put it up, Toast versus them, they still think that they are, winning, because the amount of dollars that they've put in to get the number of dollars that they have been taking out has been beating Toast. And so they believe that they are still the number one in this area. They had a lot of just really great quotes in this thing. I grabbed another one here. They said, the same way every e-commerce company calls Stripe is the same way that every company in hospitality or the stadium industry calls Shift4. We are growing like crazy, and we are needed because of our ecosystem in hospitality. I also didn't realize this. Shift4 has rebranded their company 6 separate times in the last 25 years. They acquired a company called Shift4, and they were like, well, that's a cooler name. You know why it's a cooler name? Dude, it's Shift4 on your keyboard. It's the dollar sign. that is why their name is Shift4. It's like a nerdy keyboard joke. So they were talking about how, because they're expanding into internationally, how they're like, we might need a new rebrand, considering like we're dealing in pounds and euros and all sorts of different currencies now. It doesn't really make as much sense. They should rebrand to Alt F4. No one press that. Don't press that. Actually, I think the bulk of you guys are watching on your phone anyway. Shift4 also said that they had equity in SpaceX. Both Jared Isaacman and Shift4 had the opportunity to make private investments in SpaceX. They are also the payment processor for Starlink. And so they said, hey, you know what? Why don't we end up taking a share in this very fast growing space, business as well? I was talking about how they bought Appetize for pennies on the dollar. They bought it for 20 cents for every dollar that their parent company ended up paying for it. And they didn't actually like the business as much, but they needed the talent. So it was more of an acqui-hire. And now Venue Next, which is sort of their play in stadiums, is signing more stadiums now a month than Venue Next ever did back in their busiest quarters before their acquisition. I thought that was a really great quote from them. They said capital allocation is their single largest differentiator. When you look at the amount of dollars that we put in for the amount of dollars that we get out, that is our single biggest strength. And a lot of our competitors are not even making money yet. Oh, that's freaking amazing. Shift4 continues to absolutely surprise me. I think that they have like real monopoly-esque levels of market penetration in certain areas, but they're just such small areas that it's not really even a problem yet. Um, let's move on. I got a little bit of Shopify news that I wanted to talk to you guys about. I'm not going to bore you with any of the financials because if I talk about that, you guys are going to leave. So this is just a short little anecdotal piece that I thought was fun. Today, Shopify sued the owners of stores that sold microscopes for kids. So if you guys don't know about this, this happened about 2 months ago, I would say, maybe longer than that. Time flies. But Shopify had a real problem, and a lot of merchants actually do, where they'll put fraudulent DMCA notices to pull down other stores that might be competitive or selling a very similar product, even though potentially there'd be no actual problems or any sort of copying of their products. It's like really a scam. So Shopify has now said, hey, we're going to go after those companies legally and make sure they pay up. And Harley Finkelstein, the president of Shopify, said, mess with legit entrepreneurs, fuck around and find out. Love it. Awesome. So if you guys don't know, I got a little bit of a little crush on Shopify. It's I like the company a lot. They're actually on a 7-day green streak right now. Stock has been crawling its way back up after getting pretty sold off after their last quarterly earnings, which I thought was an overreaction. But hey, to each his own. Oh, Shift4, just really quick, also got named a Fortune 1000 on the Fortune 1000 list. They haven't made the Fortune 500 list. Remember, still very small company, even smaller than Toast, in fact, but working their way up, slowly climbing the ranks. But it's all about that volume growth, the revenue growth, the margins within it. Doesn't matter whether you're buying a big company or a small company. It matters on how much people are valuing it versus what you can buy it for today. And I mean, it does matter on the high end because you can get to problems like market saturation and stuff like this. So it actually does tend to be better investments to buy mid-sized stocks and small caps. You guys should actually look at this. Look at how well the S&P 500 has done, and then how well going into the smaller names, how much better they've performed. Only very recently, in the last 2 years, has the mega cap stocks really outperformed. Historically, small cap stocks actually do much greater. I gotta fucking ban this Blueberry guy. He just says nothing unless I talk about Pagaya, which is not gonna happen. I don't know why you show up every day. You don't like any of the. He doesn't like SoFi. He doesn't like Shift4. Doesn't like PayPal. Doesn't like Coinbase. Doesn't like Affirm. Doesn't like Robinhood. Just comes to talk shit. So annoying. I gotta do 2 things. If one of the mods can just remove him. Let's go on to Robinhood. So Vlad once again sent out an awesome tweet. Robinhood has surpassed $20 billion in overnight trading volume since launching Robinhood 24-hour markets last year. Blueberry is Frank. Yeah, I don't know where Frank went. No, B-dubs. For some reason, you talk a lot of shit too, but I actually like it. I get a good vibe. But what's it called? So, yeah, what would be really interesting, and Vlad, if you're watching this, would love if you can sort of show us on a monthly basis, quarterly basis, daily basis, I don't care, how the 24-hour volume is going up as a percentage of total trading volume. That would be awesome. Cumulative, you don't get to see how well it's done. It looks like between March and April, these sort of months were much stronger than what it is today. But still, absolutely amazing knowing that this is a quick adds to revenue, adds to their bottom line. and gives users an ability to sort of get to see price action, even if you're not going to play on it, get to see price action past 8 p.m., right? News happens all the time. It is kind of cool to get to see markets 24/7. I know some people, or 24/5, I should say, but some people would actually say it's not a healthy habit. I personally don't agree. Right, there's a lot of people that don't necessarily have the same open schedule to trade stocks anytime that they want. Right, people in different geographies that want to trade American companies. I think that 24/5 markets is just the way, and I actually believe it should be 24/7 markets. It's just the way that people should trade. Um, you know, news happens all the time. Maybe it shouldn't be for day traders. Like everyone goes, oh, well, you know what? This is going to cause people to trade more and more and more. I mean, I hope that's not the case, but they can also just do that with crypto right now. There are markets that exist for 24/7 trading, and hopefully they're not being abused in a bad way. If you're a person like myself that buys companies whenever money flows in and you look to allocate it to companies that over the long term will result in good performance, then it's a pretty healthy way to just say, hey, you know what? 7 p.m. news came out on this company that I like. I'll buy it. This was good news. Oh, Blueberry hit the thumbs up button. Thanks, buddy. I appreciate you winning it back. I'm not banning B-dubs. Yeah, net whenever I get net new funds, that's where I'm putting it in. Is whenever it's midnight and I'm buying meme stocks. eBay is not planning. They are dropping American Express cards as a payment option. Too expensive. They don't want to pay it. They think that there's enough options between Visa, MasterCard, and the likes of, potentially other options like even PayPal, that they are not going to be paying the American Express fees. What else? There's some Coinbase news. I want to dive deeper into it because I only know a little bit so far. They're launching smart wallets. So not needing a recovery phrase. It's more going to be through pass keys. Very interesting, but I want to actually read up on the security about it, how they're actually setting it up. They said something about it reducing gas fees and stuff like this. So I got to do more reading. I only saw the headline. Honestly, guys, I don't think that you actually need to worry about the likes. I don't actually think it affects the algorithm. I mean, go ahead, but yeah. Okay. Before I get going, I also just wanted to say, so the growth investing course, like the thing that I'm selling, that I'm shilling out on, actually just got updated. So I did a full revamp of the entire thing. All the numbers are updated to Q1 2024. We're using SoFi as a case study, and later on, I'm going to be doing it for Nubank next. That should be coming out in probably just the next couple of weeks. I'm actually going to be just getting someone to end up doing the entire presentation, so I don't have to, take just a couple hours out of every day to figure that out. But anyway, so we went much deeper on SoFi's actual risks as an investment, as well as the tech platform. Went much, much deeper on the tech platform. So whether you guys haven't got the course, we're thinking about getting it, or already have the course, go back, check. There's a bunch of new stuff there. It's all, like every single chapter has been revamped. Go check it out. But yeah, thank you all so much for watching. Really do appreciate your time. Bye for now.